Hello everyone, welcome back to my channel. So this video marks the beginning of the week number 95 in this road to 100k realized return challenge, and this week has started pretty much the same way that it ended last week, even though with not as much pessimism, but still there are still some concerns about inflation, and also because of the basically the state of the markets has changed a little bit, uh, and so oil continues to rise slightly, and also the yields of the US debt. So investors are moving away a little bit from the US debt, and also because of the fears of the inflation. Now apparently everyone realized that perhaps inflation is creeping up pretty much along and covering the entire economy, and so now concerns are creeping up. And the way the market stands at the moment, and not only in the equity markets but especially the metals markets, we can see here that we have already done all of our trades, and we basically sold the calls that we were supposed to sell. But here you'll see that metals are still not recovering. They were recovering at the beginning of the session, and that was a perfect time for us to sell our calls, and this ended up being just at the right moment, because in the meantime they reversed it, and so right now things are going in the opposite direction. So metals are pretty much going further down. Um, we still had some buying power to sell some puts, and that's why we went pretty much to the limit of our buying power by selling some puts, not only on the copper index here. We sold 4 puts. We also sold some puts on SLIAH here. But before that, because the purpose of this was basically to try to sell some puts here on the SLV. We already have a very large position, but because we are so far away, or quite a long way below our target strike price, which is between 75.5 and 76, so we had to go for the 76 strike price. At the moment we are so far away that I decided, all right, let's sell some more puts, even if we have to increase our position size a little bit more, because uh, if these puts are assigned, we will be able to lower our cost basis to around 74.5, and so it will bring us a little bit closer to the to the exit of this position. And then with the buying power we had left, we managed to squeeze here 2 puts on the junior miners, and at this moment I don't even think we are able to buy back that much of these puts without over exceeding our buying power. So probably what we'll have to do is start by selling these ones, because these ones will be cheaper anyway, assuming they are in a position to be bought back, and then try to undo or close the positions either on the SLV and here the copper index. Now, in terms of the calls that we sold, we went pretty much on the strike prices that we were supposed to hit, meaning our cost basis. Here on the area RKK we sold at the 75.5 strike price, which is our cost basis. Same thing with the GDX. Here our cost basis, if you recall, is between 125.5 and 122. So we still went for the 122. So we are potentially facing here a capital gain if these are called away, if these shares are called away. This was on the cost basis. KRE was an interesting one, because the KRE had a cost basis of 67 here, you'll see, and it was already when we sold these calls was trading very close to the 68. It was at 67.80, 67.90, and therefore I decided to not even go for the 68 because given that these stocks took a beating last week, I decided let's try to yeah, not receive as much premium but go for a bigger capital gain, and so we went for the 68.5 strike price. The stock I believe now is still up, yes, 67.83, so it did not move that much, but we'll see if we are able to sell those shares at 68.5, which would be very good. So 1.5 dollars. So this would be $600 of capital gain, which is of course very very good. Uh, but here, yeah, the carry we already dealt with, and SLV we went again for the closest we can be to the cost basis, which is 75.6 or point 0.7, so we went for the next strike, which is 76. So we are also facing here a potential capital gain in here. XBI we went for the cost basis 121.5, and here the XLF it was already trading above our cost basis 51.5, so we went for the 52 strike price. And yeah, we already explained these puts. So all in all, you can see here that we got quite a bit of money out of each of these calls. Currently, our take for the week, assuming we don't do anything else, which I'm sure it will not be the case, we have already received yeah, a little bit more than $3,960. But of course, when it comes to these calls, chances are we will not be able to do anything about them because they are already at the minimum strike price. So I'm really eager to try to sell these shares, the underlying shares, as soon as possible. Our only maneuver room is the copper index, this SLV puts, and this junior miners puts as well. So uh, yeah, chances are we will exceed the $4,000, but we won't go much further than that because of the situation. We are potentially effectively yeah, powerless to do anything about this call. So we will just let them mature and see where do we stand at the end of the week. The dollar at this point remains relatively stable, so we are hovering around the 116, so nothing much changed in this respect. So we'll see. Uh, Hopefully this trend will reverse and we will get back to a better situation later this week, especially if Nvidia results come positive, which they normally do, but even though the stock usually comes down after earnings, but the market usually likes then when those things go right. So we'll see what happens. For the time being, this is all. Feel free to leave your comments in the comment section down below. I'm also available on LinkedIn in case you need to ask me any questions. And as always, feel free to like the video and subscribe to the channel. And we will reconvene at the end of the week, and let's see what happens at the end of this week, if we end the challenge this week or if we'll go for one more week. And I'll see you there.